We're speaking on Tuesday afternoon, and the gold price has seen further downside action hit by a stronger U.S. dollar and rising bond yields. Jim Wyckoff, senior market analyst at Kitco News, is here to break down what's going on with the markets. Jim, welcome back to the show.
Hello, David. Always nice to be with you.
Tailwinds remain strong for gold, Jim, and you and I were talking offline about the nominal yield hitting 14-month highs and the U.S. dollar hitting 5-month highs. Now, neither of these things are good for gold. We'll talk about these fundamentals first before we talk about the technicals. So, 1.72 for the 10-year yield. A lot of people were saying this level is kind of a tipping point. What do you think?
Well, I'm not sure it's a tipping point. It certainly is a 14-month high for the U.S. Treasury note yield, and that is helping to strengthen the U.S. dollar index, which in turn is putting pressure on the gold and silver market. So that's certainly one bearish fundamental element, along with the recent drop in crude oil prices, which suggests that market has put in a near-term peak. And then you're seeing some weakness across the raw commodity sector. Some of the soft commodities weaker today. Grain prices sharply lower. So we're kind of having a contagion effect in the raw commodity sector from the appreciating U.S. dollar and the wobbly crude oil market.
Okay, Jim, last time we spoke a couple weeks ago, you had mentioned that the technicals for gold remain weak. Well, here we are. It's back below $1,700 an ounce. Question, isn't it, Jim? Are technicals still weak for gold?
They indeed are, David. In fact, a little more bearish than we spoke last time. We hit a new 3-week low today in the gold market. We've got some very strong chart support at the March low of 1673 and change. If we drop below that level, you open up the door to a challenge of $1,600. So the bulls need to strongly defend that March low, and if they can't, there's going to be significantly more downside likely.
All right. What would cause a reversal in the U.S. dollar and nominal yields, for that matter? Because I see them being related.
Well, I think something that could put some pressure on the dollar would be some big stimulus spending that would work to deflate the currency. But you can also argue that stimulus spending is going to strengthen the U.S. economy. So that's kind of a conundrum that we don't know yet which way that will play out. The one thing that could also pressure the dollar index is a spike in COVID cases that would close businesses down again and damage the U.S. economy.
Well, let me ask you this. How much of the dollar strength is caused by the strengthening, or rather the rising of the U.S. 10-year yield?
It's significant, David. It's a big factor. The rising bond yields are more attractive to foreign investors, and they've got to buy those bond and notes with U.S. dollars.
Yeah, and I've heard that the rising bond yields are in turn caused by rising inflation expectations. Where do you stand on this argument?
Yeah, rising interest rate expectations, rising inflation expectations. There's a strong argument that central banks have flooded the financial system with liquidity, and that was, economics 101 tells us that's going to lead to price inflation down the road. And that's the camp I'm in also.
Let's go back to the technicals of gold now. You were talking about it earlier. 1684 is currently where we're at. Have you revised downwards your support level?
Well, no. The strong support lies at the March low of 1673.30. And if we do drop below that level, that's probably going to set off some sell stop orders in the futures markets to drive prices even lower. The downside target then would be about $1,600.
Yeah, it's interesting. Maybe you can give us a little introduction to technical analysis here, but usually when something hits the support level, does it not mean that it's going to rebound? Or would you interpret that as meaning that the price will continue to fall downwards?
Well, you're right on both counts. Closer to that support level, there is going to be some strong support there that's going to try and make that market bounce back higher. But if you drop below that support level on the chart, then that gives sellers even more. It emboldens them to press the sell side even more because that support level has given way. And futures traders typically like to set sell stop orders below support levels, thinking that once that support level is breached, prices are going to continue to slide.
Okay. So you'll be watching for that support level to make your next trade then, Jim?
Well, like I said, if we can rebound off that support level and let's say we touch that level or come close to it, which we came close today, if we can come close to that support level and show a significant bounce, then that's actually a bullish technical signal, possibly suggesting a bullish double bottom reversal pattern could be forming. So yeah, that's the key support level right now for the near term is 1673.30 in April gold futures.
Silver has also seen some downward action today. Would you say that silver is following gold right now, Jim?
Yeah, I would say that. Silver hit a multi-month low, I think about a 4.5-month low today. Price is trending down. Both gold and silver prices are trending down. That means the path of least resistance for prices remains sideways to lower.
Sideways to lower. All right, well, keep an eye out for that. Thank you. Oil now, last topic of the conversation. Crude oil has seen downward action as well, but for different reasons, right?
Right. We saw some pressure on crude oil come from. We've got some burdensome supplies in the U.S., but we've also seen maybe some economic growth expectations for the rest of this year back off just a bit from a global perspective, and that's maybe putting putting some fear into the crude oil market based upon less demand for energy.
Okay.
But very importantly, David, the fact that we have seen this backslide in crude oil prices, we've broken the near-term price uptrend in crude oil to suggest that market has put in a near-term top and can maybe only trade sideways at best in the near term. What that suggests for the raw commodity sector, that's why we've seen a lot of pressure today, in my mind, is that the crude oil market, which is arguably the leader of the raw commodity sector, when it starts to break down, all other commodity markets are in some trouble too.
All right. Jim, finally, is there anything that you are short-term bullish on?
Well, the U.S. dollar is trending higher, and that the appreciation of the dollar is very likely to continue. It's important for the Kitco readers to remember that trends in currency markets tend to be stronger and longer lasting than trends in other markets. So the fact that we're starting to trend or have been trending for a few weeks now higher in the U.S. dollar index, there's no early clues that trend will stop anytime soon, and it's probably going to continue.
All right. Well, very good, Jim. Thank you very much for your update. We'll continue to watch out for prices, and we'll follow up with you next week.
Okay, David.
And thank you for watching Kitco News. I'm David Lynn. Stay tuned for more coverage, and don't forget to subscribe.